Welcome to the Strategic Investor. Join us as we interview some of the world's most productive asset managers and uncover sophisticated and unique investment strategies in the markets. Here is your host, Charlie Wright.
Hello and welcome to Strategic Investor Radio on OC Talk Radio, where we bring you investment strategies you are not hearing elsewhere. Thank you very much for joining us. I'm Charlie Wright, and we'd like to welcome here in the studio Christina Alfandary, Managing Director at Gabelli Asset Management. Christina, welcome to Strategic Investor Radio.
Thank you, Charlie.
So, Christina, you're out of New York, but you're here in the studio with us, so thank you very much for coming here, not just for us, but to grace your presence for many in California. You started out with an MBA from Columbia University, and you've worked now for many years in the industry. We're focusing today, even though Gabelli Asset Management has about $17 billion in assets, we're talking today about their ESG strategy. And you were involved with another asset manager in developing with the world, in combination with the World Bank, green bonds and other ESG strategies. So you're a specialist there with Gabelli focused on ESG. So give us a brief background of yours, and let's start talking about ESG investing, environmental, social, and governance.
Well, I'll first add that the 17 billion number is the mutual fund business of Gabelli. We actually manage 40 billion. The firm has been around for 40 years. But what's very interesting, and many people don't know, is that the firm has actually been in the socially responsible investing area for 30 years. And we managed just around $1 billion in those kinds of strategies. And we've done that for institutions, foundations, and high net worth individuals.
Okay, thanks. So SRI, for those who may not know, socially responsible investing, was kind of the name of what we call today ESG, environmental, social, and governance. So it's kind of morphed or changed into the new name here. So tell us about ESG investing. We have not had on our show many interviews on that particular subject, and how it has evolved over the past several years because it has really started to change.
Yes, I'd love to. So as some investors back in the 60s, a lot of religious institutions were concerned with some of the controversial issues. So socially responsible investing was traditionally associated with negative screening around whether it be alcohol or tobacco or perhaps gaming. And what's happened is as certain industries have changed and moved forward, there started to become more attention paid to sustainable investments, maybe renewables, certain types of products that dealt with and focused on those things. And so the ESG strategy that we manage at Gabelli has those two components, and I'll talk about those more, but more importantly, ESG integration has evolved around looking at companies, any company, and how they manage their own sort of natural capital resources, that human capital, energy use, water use, and specifically, so a good example would be, if you think of a beverage company, they're fairly exposed to, let's say, water. And water is a natural resource that is scarce. It's becoming scarcer in certain parts of the world. And how does that company examine how much water it's using? Has it developed processes to reduce the amount of water that it's wasting in its manufacturing operations? And in doing that, it essentially becomes a more sustainable company because it is able to persist and keep developing let's say its beverages. A good example of that, more specifically, some people know that Coca-Cola in India had to shut down a factory, I think in 2015, precisely because it essentially ran out of water in the local environment and had to, shut down those operations. And those are, real economic issues.
I think for many years in the earlier years, Christina, that the ESG, or at the time SRI industry, was often criticized for being window dressing, for being a marketing ploy. But I think more recently there have been academic studies that have been very strong and come out and highly criticized the way that SRI had been done in the past and the opportunities for SRI in the future. And supposedly companies now have, and businesses have come out and responded to that. So tell us how the environment and that industry has changed.
So the environment has really changed from, again, negative screening to be much more forward-looking. And with companies paying more attention to these issues and voluntarily disclosing on many of them, there's an ability now for analysts to examine a lot of, whether it be qualitative or some quantitative data, let's say around climate metrics or water usage and things like that, and get a handle on what are they doing to manage these issues. And what's really changed, I would say, over the last couple of years, which is very noteworthy, is there have been a number of research providers just specifically around ESG information and data that have developed. Two examples are, there's a company out of Europe called Sustainalytics that all of their research analysts focus on looking at these issues for 5,000 companies. MSCI has what they call MSCI ESG, where they have 250 research analysts around the world that specifically look at ESG issues for companies, in various indices. And so what that has enabled asset management to do is to then access certain information that, in some cases, the companies are sort of highlighting some of this information, and in other cases they aren't. But what it creates is sort of an ecosystem of information that has not traditionally been looked at by asset managers or perhaps research analysts, but is increasingly is examining those issues. And then what'll also happen is you'll have specific instances, whether it be like a VW or a BP, that'll show that the instance will show that there were actually signs within the company's business operations that ESG analysis actually picked up on. In case of BP, for example, they had a multiple of sort of safety violations relative to their peers if someone really dug into that sort of information. And then the question is, as an investment person, well, what does that signal something? What does that signal? It could point to a possible risk that they may not be looking at or incorporating into their evaluation model. And so that's one of the reasons why people are very interested in understanding how the ESG information can be used. And then also there's, obviously the large issue of climate change and the impact of climate change around the world. Large institutional investors are starting to try to understand, what are the ramifications of that climate change potentially to their portfolios? What risks might they be exposed to that they aren't completely aware of?
So let's focus on the ESG investing itself. What major misconceptions do you find? That's been your total focus for many years. What major misconceptions do investors and advisors have, in your opinion, of ESG investing?
Well, I would say they really run along the two lines. One is there's a whole generation of advisors who still just think of the negative screening part. And ESG integration is really forward-looking. And so that sort of has to, there's a lot of education that needs to go on in terms of advisors understanding that it is not just, is not about negative screening anymore. It's really a forward-looking sort of risk perspective and understanding on looking at these issues. That's one. And then the other misconception is that, there are many who think, okay, well, if my portfolio doesn't have a Tesla or an LED light bulb manufacturer in it, it can't possibly be ESG. But as I said, ESG integration is really looking at any company and understanding based upon its business operations, what are the material, environmental, social governance issues to its business. Water is not a material issue to, let's say, a financial services firm. Not that it's not important, but it's just not as material as it would be to a beverage manufacturer. And then understanding how they're managing those risks.
So we need to take a short break here. When we come back, let's talk about the Gabelli ESG strategy. and how you guys apply various metrics in order to invest in particular ways. Again, we're talking with Christina Alfandary, Managing Director of Gabelli Asset Management, and we're talking about their ESG strategy. You're listening to Strategic Investor Radio on OC Talk Radio, and we'll be right back.
All right, time for our tip of the week with Charlie Wright. Who have you got with you today, Charlie?
Paul, we've got Tim Plain, editor of the newsletter The Dividend Hunter by Investors Alley. Tim, thanks for joining us.
Hi, Charlie. Glad to be here.
Tim, you published The Dividend Hunter to recommend high dividend-paying stocks, BDCs, and REITs. Tell us right now, what tip do you have for us today?
Today, I'd like to talk about a master limited partnership, an MLP, called NGL Energy Partners, stock symbol NGL.
Okay, and why do you like them?
I'm looking at this as kind of a turnaround play. It's one whose share price has fallen from almost $26 down to under $14, and it's all because the company had announced dividend increases later in the year, and then a few weeks ago they announced they wouldn't be increasing the dividend until next year, and the market kind of hammered it, but it's still a pretty good company.
Okay, and what kinds of criteria tell you that you like them as a company?
You know, they're kind of a hodgepodge of different energy infrastructure assets, and they have a tremendous amount of upside cash flow potential as energy production growth in like the Permian and out west grows. So they've got some built-in growth coming, and while you're waiting, you have an 11.5% dividend yield you can earn along the way.
Okay, so what was that ticker symbol again?
It's NGL.
Okay, and for those who would like to know more, where can they go, Tim?
For my personal newsletter, it's the Dividend Hunter, and I'm sponsored by InvestorsAlley.com. If you go to the InvestorsAlley.com website, you can find all the information about my services.
Okay, and they can communicate with you?
Yes, they can.
Okay, Tim, thank you very much for joining us today, and happy dividend hunting here.
Thank you, Charlie.
All right, back to Charlie and his guest.
Paul, thank you very much. Again, we're talking with Christina Alfandary, Managing Director of Gabelli Asset Management. We're talking about ESG strategies in general, and then we'll be getting into the Gabelli ESG strategy. So there is an attitude in the world of investing, Christina, that an investor will have to sacrifice returns if they focus on ESG. That there is a trade-off, that they get to feel good and about pursuing things that they think are socially valuable, but that there will probably a trade-off in lower returns. Does the data confirm that?
So what's really interesting is that recently, in the last couple of years, there have been studies showing that ESG integration, particularly when companies are materially managing these issues in their business operations, that those companies are essentially over a long period of time outperform. There's a 2015 Harvard Business School case study that is based on ESG materiality that shows that there's a lot of sort of notoriety around that study. There's also, I believe Deutsche Bank had done a meta-study on 2,000 other academic studies or research studies that have been done around ESG and performance. And basically the suggestive conclusions of that were that over a long period of time, an investor is not, or the strategy is not giving up performance, and the majority of the time it's actually enhancing, reduces risk, and gives rise to some alpha even.
So let's talk here about the ESG strategy of Gabelli. What is your business model, and then who do you filter out or not filter out, and what's the investment model?
So the Gabelli ESG strategy, it's evolved over time. It originated with negative screening based on what the clients were looking for. But it really sort of runs along three things. So you do have some negative screening around certain things like top weapons defense manufacturers, typically also alcohol, gaming, tobacco. We can customize that per client. And also, several years ago, we added a fossil fuel. I mean, Gabelli's investment methodology is based on private market value with a catalyst, where value, bottoms up stock pickers. And we typically, in our value space, wouldn't guide us to a commodity-based business. We're looking for companies that are high free cash flow generators. So we felt that implementing a fossil fuel, sort of a hard fossil fuel-free mandate, was fine for us in the ESG strategy. The other area that, again, we're bottoms-up fundamental. We look for long-term themes. We had done a lot of research back in the early 2000s around water, and not even thinking about sustainability, but more just from an investment thesis. If you think about population growth, supply-demand dynamics, water scarcity, need for replacement infrastructure. And then we do our homework, what kinds of sectors, whether it be water metering, valves, pumps, things like that, are going to benefit potentially from the supply-demand dynamic and increased need for water replacement infrastructure. And then we do our PMV with a catalyst. So the portfolio has exposure to that water scarcity theme. Also, another great example of another theme that we've looked at is waste management and resource recovery. Americans produce a tremendous amount of garbage. We're probably, unfortunately, one of the most wasteful, populations in the world, and somebody has to deal with it. And when you look at the waste management industry, we many years ago, we looked at it. We saw an industry that high free cash flow generating, had good barriers to entry because waste management is a regulated industry. It was more fragmented when we began our investments. There was some consolidation that took place, which was good. And also, now what's very interesting about the waste management sector is these companies are looking at how do they convert their fleets that are picking up the waste and the garbage to natural gas? They're extracting methane gas out of their landfills and selling them to energy companies. So there's a lot going on there that we think is very interesting and is appropriate for our ESG strategy. Another area is health and wellness. The U.S. population, has been shifting its sort of purchasing patterns as people become more aware that diet and not just exercise can change someone's sort of, propensity toward obesity. I mean, there's a lot of obesity in the United States. So, and then finding which companies are sort of shifting their product portfolio. What are they doing in terms of looking at, the water that they're using? There are companies that we have that have moved almost all of their packaging to recycled packaging. And so, you have that going on in the portfolio. So it's really a combination of some negative screening, some long-term sustainability themes that we sort of are exposed to, really focused in on the investment area, the investment case for those themes, and then ESG within the companies that any of the companies that we have in the portfolio. How are they managing, material, environmental, social governance issues to their business? So even if it's an industrial company, certain things in I can think of one particular industrial company where, health, worker safety is very, very important. And then, how are they managing their own energy usage? And as companies are focusing on these issues more, it becomes more pronounced in the ability for the investment team to look at them as well.
Okay, and so they have to have a combination of both fundamental value as an investment and an ESG score of a minimum amount kind of thing. Is that a basic way to describe it?
Yes, in totality in the portfolio, we absolutely have to have our private market value sort of an investment thesis intact. And then integrating both, the ESG and making sure that in totality the portfolio has a good score. One development, which you may know of, is Morningstar launched in early 2017 a system of sustainability globe scores on all mutual funds. And it's a very bottoms-up process there. And so the investment team at Gabelli around the ESG strategy is managing also to be mindful of, what that score and that rating is. But the investment thesis absolutely is the priority.
So what do you see as the biggest challenges that you have seen, Christina, in persuading investors and advisors to embrace ESG investing?
I think one of the biggest challenges is for a long time it's been considered, as I said, just sort of warm and fuzzy, just doing good, right? But now it's really evolved where, because of certain risks to, let's say, the environment with respect to climate change, it's imperative that investors, large institutional investors certainly, are looking at these issues as risks. Right? If a company, if collectively does nothing around these risks, water becomes more scarce. There's a changing dynamic in energy as wind, solar, and renewables, prices, costs decrease. So, I think that making advisors and other investors understand that it's a lot more than just doing something because it seems like it will make you feel better. That these are integral elements of information that can be very useful to a research analyst and a portfolio manager. I mean, some people are calling it, I heard one person refer to it as Graham and Dodd 2.0. You have a huge amount of non-traditional information that is now more available, and how can you use that as an investment person to make better investment decisions?
You were talking about water. We did a water interview show on a firm that is strictly and completely focused on water investing, and really opened our eyes here about the challenges of water throughout the world, especially in China and elsewhere in Asia, and certainly in India. And just very recently, within the past, I think, 2 weeks, there was a long article in the Wall Street Journal about a couple of rivers in India and how polluted they are and how many people are getting sick and how terrible it is. And, India is a bureaucratic quagmire. And so that's the primary problem. This river flows through different organizations and bureaucratic responsibilities, and they can't coordinate things, and people are dying, they're getting sick right and left, and it's just horrible, the amount of pollution in that water. So there's no question about it. Water is an issue in this world.
Yeah, definitely. And I think issues, as unfortunate they were, the Flint, Michigan water crisis, it's only when there's a crisis around something like water where suddenly people realize how urgent and dire, when you're without water. Look at what's happening in Puerto Rico. When you're without water, it is a dire situation. So anything, companies can do, especially ones whose businesses are heavily exposed to water, anything that they can do to decrease their water usage, waste water less, is important from a business standpoint.
So, Christina, a question we'd like to ask all of our guests: what keeps you awake at night?
Well, the market right now is, the valuations are very extended. So, that's a little bit troubling. Personally, I think the situation where you have, with respect to climate change, you have both Nigeria and Syria having joined the climate pact, and now the U.S. is the only country that is not part of that. I think the U.S. should be a leader in innovation around some solutions with related to climate change, and that's a good opportunity for us economically and for jobs. And I think right now, it looks like China is going to be potentially become the leader in that, because you've got the government support to it. That personally unsettles me.
Okay, and the second question we'd like to ask all guests is, what book on investing would you recommend for our listeners?
So there's having been, a graduate of Columbia Business School, there's a book written by a Columbia Business School professor, Jeffrey Heel, and it's called Endangered Economies. And it walks through, from an economist standpoint, the whole concept of natural capital, and how, in fact, people have not been properly accounting for sort of the waste of natural capital. And because certain resources are finite, that has ramifications. If the fisherman uphill, ruins the stream for the fisherman downhill, there's a cost to that. But right now, some of that has not been considered or taken account of. So I think it's an excellent book.
Well, thank you. No one has recommended that before, so we appreciate it. So for those who would like to know more give us website and contact information.
Sure. So our website is www.gabelli.com, Gabelli.com. And I certainly can be reached in New York at 914-921-5101 on this subject matter. I get contacted by people in Singapore, all around the world, to talk about, how do you look at these issues. So I'm happy always to speak to investors or advisors and anyone, even if it's just for educational purposes.
So thank you, Christina. Final words for our listeners.
Final words for our listeners. Well, I would, for investors, I think there are very, very large long-term dynamics that are changing around us, changing the world around us, whether they be shifts in energy or water scarcity. And I do think it's important for investors to understand what do they own and why do they own it. And to the extent that they have an opportunity to play some of these investment themes, whether it be a water or health and wellness or, sustainable agriculture or something like that, I think that's something that everybody should look at.
So thank you very much. And it's certainly a worthy cause to take care of Mother Earth and all of our futures here. So, Christina, thank you very much for coming into the studio today and being with us and sharing your time and thoughts with us.
Thank you, Charlie. It was a real pleasure to be here.
Again, we've been talking with Christina Alfandary, Managing Director at Gabelli Asset Management, regarding their ESG strategy. You've been listening to Strategic Investor Radio on OC Talk Radio. We'd love to have you contact us at info@strategicinvestorradio.com, and you can go to our website to hear podcasts of all of our interviews and shows, strategicinvestorradio.com. I'm Charlie Wright, wishing you an enjoyable week and productive investing.
Strategic Investor Radio is a production of OC Talk Radio and is provided for educational purposes only. Content of this program and the views of the guests should not be considered as recommendations by OC Talk Radio or investment advice from the host Charlie Wright or any other entity attached to this production. Investors should always consult qualified financial, investment, tax, or legal professionals prior to investing.